Hey everybody, this is Richard and welcome to another episode of Fatal Error. This show began as a research project for me to understand how entrepreneurs and founders think about the climate emergency and figure out ways in which all organizations, not just non-profits, can become climate positive. My guest today is Romain, founder and CEO of Satgana. Satgana is a brand new venture builder fully focused on building and launching companies that address the UN Sustainable Development Goals, or SDGs. Romain's previous experience of doing the same in fintech makes this a very exciting project to watch. Let's hear what he has to say. The simplest way to start, I found generally, is just to talk a little bit, start off by just going through your background, right? So who is Romain and how did you get to where you are today? So what's your background in entrepreneurship or kind of whatever focus you've had over the last 10, 20 years, you know? So can you give us a quick overview there of you, like your small bio?
Sure. So yeah, my name is Romain Diaz. I am sorry.
That's okay.
You'll do some editing, right?
Yeah, sure.
All right. So my name is Romain Diaz. I'm originally from France, where I spent the first 20 years of my life happily doing fairly standard prep school, which is quite common in France, and then business school, bachelor, masters. Didn't really learn so much, to be honest, apart from mostly what I did not want to do, which was working in corporate and more like a suit and tie type of environment. So quite quickly, I understood that I wanted to be an entrepreneur. And so for the past, I would say 10 years, I've been on the entrepreneurial journey, and I often define myself as an adventurer of life.
Okay.
And I've decided to do quite a few things, I would say a bit off the beaten path. I've traveled to quite a few countries, worked in a few countries, mostly emerging countries. I've always loved the, different, a bit more chaotic environments of some emerging countries. So I was fortunate to live and work in Mexico, in China, in Morocco, and then in South Africa, where I really started to, build companies. So
what sort of companies have you built? What sort of projects have you been, kind of involved in your entrepreneurial journey?
Yes, so I started with not so much back then into climate and sustainability and so on. I was more like a traditional entrepreneur. I often say that I'm a recovering mercenary entrepreneur. So I was more on the traditional path of building, fintech and SaaS and B2B and so on type of companies. So in South Africa, I've always had so many ideas and struggled a bit to focus back then. And I wanted to, build a lot of the ideas that I had. So I've decided to co-found what we call a startup studio. So basically, for people who are not familiar with the model, the idea of a startup studio is to have like an umbrella company that founds and funds companies from scratch alongside entrepreneurs. So back then, that was in 2015, we had raised a bit of capital from mostly French business angels who entrusted us with some money. I still wonder sometimes how we managed to raise capital and get them to trust us, but hopefully they will be happy, at least on paper so far. It should be good returns.
Okay.
But yeah, we raised a bit of capital to build startups from scratch, mostly fintech. So one of them that I'm quite proud is a company that is called FinChatbot, which does AI-powered chatbots for the financial industry in South Africa, which we started 4 years ago. And my co-founder, business partner, and one of my closest friends is still running the company and growing it really nicely. I'm still on the board and involved with strategy, fundraising, and so on, but I'm not actively involved anymore.
And so this startup studio is based in South Africa, or is it a remote operation? What's the...
Yeah. So it was based in Cape Town. So we had a bit of capital, not so much, but that enabled us to start 4 companies in South Africa. Some failures, some that might still succeed, and one which is really growing very nicely now. And yeah, that was based in South Africa, Cape Town mostly, and then FinChatbot is now based in Johannesburg. And about 2 years ago, 3 years ago now, the fund that we had raised was fully invested, and I decided to take a bit of a break. I was also fortunate to sell the first company that we had co-founded. So I took a bit of a break and decided to travel, and also I was a bit burned out, and learned a lot on how to do things and how to not do things.
I'm
and familiar
with the burnout situation, and some of those lessons are probably similar. Okay, so
I learned that you can't sprint a marathon.
Yes.
Yeah, you can't sprint a marathon. You can sprint, you can do a marathon, but you can't sprint a marathon. So I took a bit of a break and went traveling, and that's where I started to learn about climate change, and I stumbled across the framework of the SDGs, which I found obviously it's not perfect, but when I looked at it, I said, yes, that's exactly the word that we need. And that's,
okay, hang on a second. You said, which framework did you stumble across?
The SDGs, the Sustainable Development Goals from the UN.
Can you, what do you mean when you stumbled upon them? So I'm interested in how people kind of, because you said like, you described it as a recovering mercenary entrepreneur, right? So, so I'm guessing part of that is kind of your shift of how you learned about climate and decided to. So what was that journey like for you? What did you, what did you learn? Did you hang out with activists? Were you just kind of worried about things? What's your kind of personal, well, to copy the thing we were talking about before, it's like, what's your personal climate journey, I suppose, right?
Yeah, exactly. Or a climate awakening.
Yeah.
Mine goes a bit beyond climate, in the sense that I think climate and the environmental pillar is obviously of paramount importance, but also the social aspects. If people don't have something in their plate to eat, or if they can't have a decent education or access to water and so on, they won't help in the fight for climate. So both pillars for me are equally important. So it was about 2 years ago, I started to take a bit of a break and purposely not work for a bit, and just starting to read and learn, and just stumbled across this framework of the SDGs, and really started to shift my perspective on what the role of business should be. So although I had a bit of an interest in social impact, I did my master's thesis 11 years ago on social impact and how business can help to alleviate poverty, with a focus in Brazil already back then. And but for some years I kind of forgot about it, I have to say. So I was more in the traditional path of building companies with a traditional VC route of you build a company hoping to do big exponential growth and exit in a couple of years for shareholder value creation. Traditional path, and I'm not blaming it, but I realized that for me it was not enough anymore. And I'm not saying that the financial performance is not important, and quite the opposite, actually. I think
so this is a topic that actually has come up quite a lot with the people I've spoken to, both on this podcast and in general, which is sort of the role of business versus the role of, for example, charities, right? And you mentioned, for example, social impact, and for a long time, I think it's been sort of accepted that charities do the good stuff, businesses make the money, and then a small percentage of that gets channeled into charities as a corporate social responsibility kind of thing, and so on. But obviously, I mean, we're seeing a shift. A lot of people think things should be different. What do you think a business should be then? Obviously, the financials are important, because without the money, well, whatever it is you want to do, you can't do, right? You can't pay salaries or even make donations or whatever.
Yeah.
But so what are you thinking of, if you build a new business, what should be structured differently?
Yeah. So there's nothing novel that we're inventing here, but my belief is that all businesses should have a triple bottom line. So financial bottom line, environmental bottom line, and social bottom line. And at the moment, traditional companies only have a financial bottom line. There's also obviously some greenwashing, and it's simple to present things in a way that doesn't make it look like it's only the finances that matter. But for a lot of companies, the reality is that it is still finances first. And in the way we intend to do things, we want to actually combine the three. And I actually stumbled across a very interesting quote recently. It was from Andrew Beep from Obvious Ventures. He's a managing director at Obvious Ventures in the US. And I like his quote. I have it here in front of me, so I'm going to read it. It's people talk a lot about profit and purpose. For a long time, it was purpose versus profit. Then we started to realize that it was possible to combine purpose and profit. And we're now entering in a world where it is profit because purpose. The goal is to create companies in which the more they sell, the more good there is for society and for the environment.
That's a very
that's
good
the fundamental belief.
Very good way of
Yes.
putting it. Yes.
Yeah.
And that actually, one of the things I struggle with sometimes, and other people do as well, I think, is sort of that feeling of, well, if I'm doing something good for the environment, socially, or whatever, then it sort of feels wrong to profit from it. And I think there's a difference between making a profit and using that profit to do more of the things you're doing versus profiteering, right? So sort of exploiting an opportunity, which is how a lot of people talk about traditional capitalist approaches to business, I suppose. So what is it that you're setting up, right? So because you said you sort of mentioned a little bit like, this is what we're doing, and I want to know what you're doing.
Yes.
So
sure.
because it's quite exciting. I want to let you explain everything, but from the little bit I saw, I was very intrigued. So go for it.
Sure. So, when I had that realization, I thought, okay, now what do I do with it? And I still very much believe in the power of business, because business has the potential to create new solutions, bring innovation to market, and so on. But on the other hand, is also the biggest emitter of greenhouse gases and enabler of or creator of inequalities and so on. So business definitely has a big role to play in creating more or less good in the world. So I realized that I wanted to use business as a tool to create more good. And that's where the idea of Satgana germinated. So Satgana in Sanskrit, Sat means the good, the fundamental good, and Gana means a company. So we aim to be a good company, which as a platform to build other good companies. So I wanted to take my experience co-founding a venture builder in South Africa to do more of the same, but with a different approach, this time with all these learnings on how to do things and why we do things. And so we're now starting Satgana. We are just launching now with a bunch of incredible people who just joined us. And we are a venture builder, which aims at funding and co-founding alongside extraordinary entrepreneurs, companies that will build solutions with a market-based approach to address the sustainable development goals. So either the social aspect or the environmental aspect, but in a for-profit manner. Okay,
so it's a startup studio like the one you built before, but this time focused specifically on climate-related projects.
Exactly.
Just climate-related, or are you looking to deliver climate and social?
Yes, both social aspect and environmental aspect. So we're fully remote, fully distributed. We have teams in various geographies across.
So I have a bunch of questions.
Yes,
I have a bunch of questions.
Let's go for it.
So it's exciting, right? And I was going to ask you whether you're based anywhere with this remote. You've answered that, which is great because climate is a global problem, and I think this helps. But so you said you have a team. So what are you trying to? Are you trying to get people to kind of, is it like a Y Combinator style thing where people apply with their ideas and then you pick and choose and you fund somebody or not? Or are you doing everything in-house and coming up with your own ideas and then validating them and so on? What's the model that you're adopting?
Yes, it's a good question. So venture builders or startup studios, we use the term quite interchangeably, there's quite a wide spectrum of venture builders. There's the ones that indeed really come with internal ideas and often ideas from the founders and to do internal validation and so on. And then generally these ones are very operationally involved, can they cannot do too many companies at once because they're really actually building the company, and they come with a quite high chunk of equity into the startup because they actually build everything. So that's on one hand of the spectrum. On the other hand of the spectrum, there's these venture builders or startup studios that are much less involved and have more of a flavor and of an accelerator, except that it might be that the idea is not already formed when the founders join the studio. So there's a bit of there's quite a wide difference of the approaches between different studios. Our approach is to actually tap into innovators and innovations wherever they are. So people coming with an idea across the SDGs. So again, social pillar or environmental pillar. Mm-hmm. And the idea is to help them to bring their idea to market, to fund their company, and to help them by bringing operational expertise, organizational expertise, and opening networks so that they can build their company from zero to first round of funding. So it's to compare it to Y Combinator, although I don't think we can really compare ourselves to them, but as compared to, let's say, accelerators, it's a more bespoke approach in the sense that we don't do 10 or 20 companies at once. We do maybe 2 or 3 companies at once. We're very hands-on, and it's not a predefined program where people arrive at the same date and leave at the same date, demo day, and so on. So it's really from zero to first round of funding, which might take 12, 18, or even 24 months.
Okay. And by first round of funding, do you mean from you? Or,
so
or are you helping these entrepreneurs raise further external funding?
Yes, so both. We invest the first pre-seed round from idea stage for the entrepreneur to have a living stipend until they're able to build their innovation, their product, and then raise their own round of capital. And we open networks with our networks of investors and business angels and so on. And then there's an external investor that actually invests into the company.
Brilliant. Okay.
As a seed round.
Okay, and when you're saying, you're saying 2 to 3 at a time, does that mean 2 to 3 like a year?
Yes.
Yes. Okay.
Yeah.
So, is there any specific? So the goals you mentioned, and even when people talk about climate, it's really hard. It's a very big thing. It's almost like saying, "Oh, we want to invest in science." Is there any specific focus that you're hoping to focus on? I suppose any specific area you want to focus on, or any specific type of climate action that you're hoping to support, or is it just free for all at the moment?
Yes, so it's indeed something that we've given quite a bit of thinking to, and we've decided to go rather broad than narrow, because our value added is not really so much into the expertise that we have into one specific area around climate or anything. It's more financing and finding great entrepreneurs and bringing operational capability across technical expertise, financial expertise, marketing expertise, and so on. But the true experts should be the ones that are actually coming with their own innovation. So we're more bringing the support structure, believing the entrepreneur from day one and in their vision, and helping them to actually bring their innovation to market until they're then ready to fly by their own wings.
But you must be, in this. So typically, for example, when like a regular accelerator or incubator or even VC, right? There are a bunch of things that they'll use to decide whether they invest or not. And there's, team and this, that, and the other. But some specific things tend to be the potential for return on investment, right? So if I invest $1 million today, am I going to 10x it in 5 years or whatever? Now, presumably in your case, you have that as well, because of course you're investing money and time and you want to see a financial return. But how are you evaluating the climate side of it? So yes, the entrepreneur is the expert, right? But in some way, I guess, do you have a way of, for example, measuring the return on, for example, carbon capture, or I don't know what, you know, are you somehow measuring, looking for a specific return metric that a company is going to deliver on the you know, on the one of those other two bottom lines, not just the financial one?
Mm-hmm.
Or are you just
Yeah.
trusting that the entrepreneur sort of has the credentials to know what they're talking about?
Yeah, that's a good question. So there's a few things we intend to do for, you know, ensuring that it is not just about delivering financial return, but actually making a positive impact. First, it is, you know, ensuring in the way we select entrepreneurs that, you know, there's an actual benefit for the intended SDG or sub-SDG target, and also ensuring that it does not have negative externalities across other SDGs, because that can often happen, that you have a positive impact on one but negative on others. So we have an investment committee that we're forming at the moment, and we have some technical experts within the team that are able to also bring some expertise to, you know, assess all these things. Then we have we intend to bring a chief sustainability officer as well, which will also be involved in these assessments. Then we obviously intend to have some impact assessment frameworks, such as, you know, the impact management project and all these other great frameworks which we intend to use. And also, one of the upsides of our model is that since we create companies from scratch, we obviously have quite a bit of a say on how things are being done, including you know, there's the impact of the product itself, but it's also the impact on how you do things internally. And to this end, we intend to ourselves become a B Corp as soon as we can, and have enough substance and so on. And also to help our portfolio startups to also apply and become B Corp certified as soon as they have enough substance to do so.
Do you think you'd be requiring companies to be B Corps themselves?
I don't think so, but I think if there should have a good reasons for not wanting to do so, and if there's not a strong, compelling argument for not becoming a B Corp, that might be a bit of a red flag for us.
As you say that, I can't think of a good reason why you wouldn't want to be a B Corp. If you're focusing on one of these goals, right? On especially if you're focusing on the sort of on the sustainable development goals and things like that. I guess maybe the only reason I can sort of think of right now in terms of like creating a startup is maybe if it affects your exit potentials, right? Possibilities, which then again seems like a red flag for the motivations behind sort of the entrepreneur's kind of desire to start that company. But there is an admin overhead with B Corp, so maybe that's a thing that perhaps a 2-person startup might find it hard to deal with. I've not done the process myself, but I've spoken to quite a few people who've done it, and depending on the size of the company, it can be quite a lot of effort. So maybe that's like a reason for not doing it right away. But yeah, okay, so just to round off that bit, because then I have like a couple of other questions about the project. But so from kind of like start to finish, are you wanting to be sort of solicited? Are you know, do you want entrepreneurs to get in touch with you and pitch you? Might be shooting yourself in the foot here, but or are you have, you know, like you have your networks and you're picking people, and if you know, if somebody is pitching you, what would they expect to happen if they're kind of accepted, right?
Yeah. So actually a bit of both. Partly it's going to be, you know, organic. We are, so maybe to just explain the timing of our conversation, we are pre-launch, but
yes,
we agreed that this would be published after launch. So now I can kind of say that we have launched, I guess, where I'm speaking in the future.
Congratulations.
So we are doing, social media and blog and starting to, slowly but surely speaking in the media and so on. So we hope to generate inbound interest from entrepreneurs, but also, and to get them to really apply and pitch us, if we can put it like that, or at least go through the application process for us to start assessing whether they could be a good fit. And also, one big pillar of how we intend to do things is to build integrated partnerships with other people on the value chain. So whether that's universities or NGOs or even corporates, or ideally our dream would be to strike a partnership with like a UN agency, for example. That for us would be a very good way to work alongside other organizations that have the same mission as us, to get some of their network of potential entrepreneurs to actually build their company with us.
So what happens then? Let's say I have an idea, right? And we've had a conversation. I pitch you in whatever way, like a business plan or a prototype or something, and you say, "Yeah, okay, Richard, let's work on this." What happens then? Is it like a program? Do you create a company and invest in it? Is there a mentorship sort of program over 2 years, you said, I think? Or what would somebody, I know you can't, these aren't things that it's exactly sort of step by step, this is what happens, but what's the general kind of stuff that you'd expect to be happening in those 1 to 2 years that you're supporting the company?
Yes. So we will obviously start to open applications and get people to apply. We will do our own selection, and then we will start working with a few more entrepreneurs than we can actually really fund. We will pay a living stipend to some of the most promising ones, but we will have an investment committee that gets them through different rounds of going through, I'm not sure I want to call it a program, because it's not really predefined. It's more bespoke based on the actual needs of the company. Some companies may need more help on, technical feasibility and development. Some may need more, or may be really strong in this part, but you need more, for example, marketing support or financial support, for example. So it's more bespoke, which is a strong asset of the venture builder model as compared to, for example, an accelerator model. And we have a team that are really strong in their area of, either sectoral expertise or functional expertise. And we will support these entrepreneurs wherever they need them, again, across marketing and finance and operations and design and so on. And we will get them through different rounds or milestones for the investment committee to actually decide to fund them further and invest more and more into the most promising ones based on how well they develop their product, how well the team is working together, how well we can also be helpful to them, how confident we're in their capacity to scale and to raise capital and to have a broader impact into what they're intended to do.
Okay. It's a bit like a reality show in a way, like The Apprentice or something like that, but with different goals, I suppose. But that's interesting that you're not investing right away, but you're offering a stipend for the people involved to basically be able to work on this in time, presumably, right?
Exactly.
So, okay, that's.
It's also a way for us from
I haven't come across that much before. I think I might be wrong, but I think like Y Combinator offers something of the sort or similar kind of programs, but it's not a very widespread thing. I think maybe just some of the kind of richer incubators do some of those things. So that's pretty cool.
If I may react to this,
sure.
There's, in my opinion, quite a few accelerators, and a lot of them do provide capital. But I find that there's actually two death valleys. There's one death valley before the accelerator, which is amazing entrepreneurs who have amazing ideas but can't bring it to market because they are not strong enough, maybe in marketing or in finance and so on. And it may just remain a great innovation in the lab, but does not really see the light. So we aim to find this type of entrepreneurs so that they can actually bring their innovation to market. And then there's also a Death Valley after accelerator. So probably not Y Combinator and 500 and Techstars and so on, because they have such a footprint and network of investors and super selective and so on. But in many accelerators, you have your program, and after the end of the 3 months or 6 months or whatever the program is, then a lot of these companies actually don't make it because they don't have enough support. So that's also where we intend to fill a gap, is to actually really bring the entrepreneur from zero to first round of funding, where it has enough capital and enough traction to actually really deploy his or her innovation.
Okay, that's interesting. I never really thought much about the second Death Valley that you were you were sort of describing there, but it kind of makes sense, doesn't it? I suppose it's a bit like when you have a bunch of turtles hatching and they all run into the sea, and then these little things just have to survive somehow. They're not really sort of, it's a very low yield rate, really. But okay, I wanted to ask you one last thing to round off the conversation, which is, so you're acting as an investor in a lot of ways, both in time, expertise, and money. But you've raised money yourself, somehow or other, to fund this venture, right?
So we're currently in the process of engaging conversations with investors. We haven't closed our fund yet, but we are having very good interest and momentum, but it's not closed yet, and I'm sure we'll be able to do a good update.
So I wasn't gonna ask you to divulge like sensitive details or anything like that, but I was curious to get your take on, sort of the investment, what's the word I'm looking for? Arena, the kind of industry, is it easy to approach investors with this kind of climate focused type of projects, where maybe the financial return is different to what normally one would expect, right? How have you found that process? Are traditional VCs or angels not caring and you have to sort of seek out dedicated ones? Are people's approaches shifting? Are they looking for, different, are they like, yeah, we want to do good, but we still want our 50x return in 2 years, or what's your experience been, I suppose, right?
Mm-hmm. Are you talking about the venture builder level or for rather the startups level?
Well, anything that you can speak to, right, comfortably. So, but generally, the one thing that I've sort of seen is fairly common between pre-seed investors, angel investors, venture investors, is that, like somebody who's doing a Series A or so on. Even though some people might focus on things like clean tech, they're still looking for the same outcome from a startup. They're still looking for the financial return that they promised their limited partners, which has to become, they need to return in 5 to 10 years and so on. So you can be doing all the social good you want, but if you're not providing a 10, 50x return, then investors' doors are closed to you, right? And so you're back to being to use your term, a mercenary entrepreneur doing whatever other regular stuff, right? Is that changing? Has it changed? Was it hard to find people to even listen to you about this kind of stuff?
I think my fundamental belief is that for this decade, the companies that are going to provide the strongest financial returns are the ones that are not so focused on the short-term financial returns, but really on bringing value and building value for society at large in the long run. So my main problem with venture capital as it stands today, apart from the fact that it's not so much focused on social impact and environmental impact, is the timeline of venture capital. So as you probably know, venture capital funds are usually structured in a way that forces them to exit their portfolio companies to realize returns. And that is done in a time frame which is fairly short. And in my opinion, doesn't work well for climate and social innovation.
Yeah.
So we're not yet innovating so much on fund structure because we're already innovating on a lot of things. So we've decided to not, be different on everything. So we're still speaking, the words that our potential investors want to hear and see, because it can be sometimes a bit scary to do things differently and in an unconventional manner. But in the long run, we very much believe that the investment structure and terms and timeline and horizons need to be much longer. So we think we can deliver outperforming.
And by much longer, what do you mean here? So 20, 30 years, 40? What are you thinking?
I think, for really social innovation and climate innovation, the real returns are more than 10 years. I think 15 years is probably conservative, but generally I think the best structure, although it has a lot of pitfalls and challenges and so on, is actually to have an open-ended fund structure where you don't realize returns by selling your investment, but actually keeping them. There was a quote once that I found interesting from Warren Buffett saying that if I have Michael Jordan on my team, why would I want to sell Michael Jordan? I'd rather keep Michael Jordan. And I heard that quote a couple of years ago, and I always found it really interesting from an investment perspective, because I think once you have a great investment, you actually want to stick to it rather than sell it. Obviously, there's challenges around, how do you calculate your NAV and how do you provide liquidity to investors and so on. But generally, I think it's a much more adapted structure, also from a sustainability perspective, rather than having to always source your investment and then sell them once they start to really realize the biggest monetary value.
Okay.
We'll get there.
That's an interesting quote. I think I'm gonna try to remember that one, because it's a good description of and it sort of incentivizes you to find and train up those Michael Jordans, right, and keep them rather than just find somebody who looks good and young and then sell them off as soon as you can. Yeah. Okay. That's great. I think I'm quite happy that we've covered a bunch of stuff over there. Because this is going to be going out when you've already kind of launched. Is there, if somebody wants to get in touch with you, what's the best way of doing that?
Yes, sure. So I'm usually pretty responsive on LinkedIn. They can also send me an email, romain@satgana.com. So I'm usually easy to reach and pretty responsive. So Feel free to email me, whether that's entrepreneurs, whether that's potential investors, whether that's potential partners, or just, speaking about interesting stuff. Always happy to meet with great people.
Well, I can attest to that, because you were very responsive with getting back to me. So for sure, that's something that I can vouch for. Hey, Romain, thank you so much. I think
pleasure. Thank you, Richard.
We can wrap it up there for today. Best of luck with the launch, but also with the continuing sort of hunt for entrepreneurs and startups in this area. So, thank you, and I think that's it for today. Thank you for listening. Please visit fatalarea.blog to join our mailing list and help support our community and project. And if you like the music, please check out the Happy Quartet on Bandcamp. That's it for today.